Gold price hits extreme correlation versus US dollar and real rates. The gold price hit fresh 2023 lows against the US dollar on Tuesday, touching $1,805 before rallying more than $20 per ounce as interest rates edged back from fresh multi-year highs in the bond market after weaker than forecast economic data followed last week's strong inflation figures. Silver prices meantime neared four-month lows, bottoming at $20.43 early in London before rallying back to unchanged for the week so far at $20.80 per ounce but ending February with a 12.7% loss in the London bullion market, its worst drop since the COVID crash of March 2020. Gold prices continued to trend lower in nearing oversold territory, said a note overnight from global bank and London bullion market maker Standard Chartered's precious metals analyst Suki Cooper. Macro headwinds have continued to build and is shown that the market started pricing in peak rates and USD weakness prematurely. With bond prices falling across the board this month on expectations of a higher for longer for US Federal Reserve interest rates, the yield on 10-year US inflation-protected securities has risen by 0.3 percentage points, the sharpest monthly rise since September's record 1.0 percentage point jump. The US currency has also risen this February, adding 2.6% on its trade-weighted dollar index and gaining for the first month since September's fresh two-decade highs against the rest of the world's major currencies. Gold's negative correlation with the US dollar has jumped as the precious metal has fallen this month, with the R-squared coefficient of their daily relationship rising above 90% on a one-month basis, a level breached for only 6 brief periods across the last decade. Reports of the dollar's demise are greatly exaggerated, says an opinion column today from Francesco Guerriera, economics editor for Breaking Views at Reuters. In fact, its linchpin status remains unshaken in capital markets, trade and debt. Versus inflation-protected bond yields meantime, gold is now more strongly correlated against 10-year TIPS rates than any time since August 2020, peak of the precious metals' first-wave COVID surge when it set what remains its all-time record spot market high of $2,075 per ounce. On a statistical analysis, the R-squared would read 100% if gold and the 10-year TIPS yield were moving exactly opposite. Like gold's correlation against the dollar, that figure has typically read 34% across both the last decade and the last 5 years. Today it comes above 89%. Despite news Tuesday that U.S. house prices are falling and manufacturing activity across the Midwest shrinking faster than analysts forecast, more than 1 in 4 bets on next month's Fed meeting now see the U.S. central bank hiking by half a percentage point up from 0 bets at the end of January after slowing its rate rises to a quarter point at the start February decision. For the end of 2023, just 0.6% of current betting on December's decision now sees the Fed finishing the year with its key rate below 5.0%, down from nearly 4 in 5 bets this time a month ago according to the CME Derivatives Exchange's Fed Watch tool. While the giant SPDR Gold Trust expanded by 0.03% on Monday, the first such growth in its shares in issue for almost 2 weeks, the world's number 2 gold ETF, the iShares Gold product shrank by 0.1% to reach its smallest size since June 2020. iShares Silver Trust meantime shrank by another 0.3%, reaching its smallest since early February and smaller by 30% from its record of New Year 2021 silver squeeze ramp, when bullion prices jumped close to $30 per ounce for only the second time in the last decade. Contrasting with Western ETF investing, China's gold demand strengthened further on Tuesday according to the Shanghai Premium, which reached a 4-month for the gap between Chinese and London bullion prices, offering new imports into gold's number 1 consumer market an incentive of nearly $37 per ounce, the highest in 4 months and well over 4 times its typical level. Accounting for India's massive gold import duty and taxation, Prices in the number 2 consumer market last week edged down to show a $1.50 discount per ounce to London, according to Reuters, reversing the first move into a premium since the global bullion market's 2.5-year lows of early November. For physical support, 2022 saw record central bank demand, and we see the de-dollarization theme continuing to play out, especially the more that deglobalization plays out, said Bullion Refining and Finance Group MKS PAMP strategist Nikki Shields on a 2023 Outlook webinar for the LBMA on Monday. We see investment demand re-emerging in 2022, certainly on the view that the US dollar has peaked after the massive move last year. Fixing at London's PM benchmark some $100 per ounce lower from the last day of January, gold bullion ended February with a 5.2% loss in dollar terms, the steepest one-month drop since June 2021. The UK gold price in pounds per ounce meantime dipped through £1,500 for the first time since Christmas week as sterling extended its gains following the Windsor Agreement with the EU over Northern Ireland's single market trading relationship, and the euro gold price also touched a new 2023 low before rebounding sharply to €1,720.